Broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone, and welcome to the November edition of Digging into the BI. This is where members from the Maryland, D.C., and Virginia get together and we look at the latest issue of the member-only magazine, the BI, and we're going to look tonight at FactSet as a stock to study. Robert Haft is the undervalued feature, and then we have two really good friends of mine, Mark Robertson and Ken Kavula, who just finished doing their small company discovery, and they decided that they'd go a little bit deeper onto two of those companies, one being United Therapeutics and the other one being Badger Meter. So we're welcome. We're really glad to have you. This is our 25th and 26th different presenter in this calendar year. We have been doing this now. This is officially 5 years. For any of you that have been around for at least half of it, thank you very much. We're really, really happy whether you're in Maryland, D.C., or Virginia, or whether you're coming from Michigan or anywhere else around. We're glad that you're here. So let's go to the next slide, Cheryl. This is the standard disclaimer. We are doing this presentation for educational purposes. We believe, as the DC and Maryland chapter believe, as does Better Investing, that investors should conduct their own review and analysis of companies. We're going to discuss securities. We may or may not own these stocks in our own personal portfolio. And if we show you additional things outside of the Better Investing sort of umbrella, it doesn't mean that we're endorsing or promoting those products or websites. So please keep that in mind. And we are recording these, and yes, I will get them up on YouTube some point. Let's go to the next slide. So for those of you that don't know who Better Investing is, again, looking at the people in the audience, I see most of you are, but since this is out on YouTube, we want to be able to let you know who we are. Again, we're a long-term fundamental investing. All of us that are volunteers from the Mid-Atlantic region, although tonight we have two Michiganders jumping in, so thank you. But again, this is sort of the environment that we're in. There are many different ways to invest. This is the way that we choose to invest. Next slide. Again, here's our website up on YouTube where you can see the videos. We're trying to get up over 300. We're sort of inching along one by one. But what we ask for you to do is if you go and take a look at these presentations, you can certainly save them with your friends and the like. But please go there and like the videos, like and subscribe to the channel. All of the presentations are organized into what are called chapters. That means you can advance just to the presentation you want to be able to hear and be able to then get off of it and move to the next one. But please do those things to help us grow this community. Next slide. Again, most of you are regulars and the like, but I still have this up just in case. The biggest thing out of all of this is really that green arrow down at the bottom. That's the one that goes to the handouts. And in those handouts, we have PDFs for the slides, as well as 4 completed SSGs. And you can share those with people in your club, people that you want to interest in investing, and those that are just new into Better Investing and you want to see some judgments on completed SSGs. So please, you're more than welcome to do that. Next slide. So why do we do this? Well, we'd like to be able to show people that are new or maybe uncertain of their judgment how we come about our judgments. We're trying to do the best practices of what a long-term fundamental investor will do. We're doing this as a joint program between the two Mid-Atlantic chapters, the Maryland chapter and the DC Regional chapter. DC Regional includes Montgomery County, Maryland, Washington, D.C., and the entire state of Virginia. We're also trying to be able to promote the Club Connect program, and it's a great way for you, if you're a club in Maryland, D.C., or Virginia, to be able to participate and be able to promote your club. So thank you to please come here, and we'd love to have you make a presentation going forward. Let's go to our next slide. So in just over an hour, we're going to do 4 stocks. We always do the monthly stock to study and undervalued feature. And then we have 2 others that are generally coming from the Better Investing website or magazine, but they can also come from a myriad of different things. One of them, of course, is the Mid-Michigan Roundtable, where both Mark and Ken are from. And sometimes we've used Rocky Mountain chapter, but we're using what they've presented just this Saturday as an example of some great ideas. So let's go to the next slide. So again, if you ever want to be able to find where the stock to study and undervalued feature are, you can be able to sit there and go to the Home About Us news releases. These were announced in late August, and you can see they have some committee members that have some pretty decent accreditation on this. But you can find this whether you're a BI member or not. But we think it's kind of interesting to see what are these professionals looking at, and is it something we agree with, or do we want to make some changes to? Next slide. Again, here's a way to be able to stay connected to our community. Again, if you want to be able to receive information like the monthly newsletter from headquarters, you go under where it has, first you see where the red circle is up at the top, where it says My Account. Then from there, you go over to the screen capture on the left with the green circle, where you have the email and product subscription information. That will open up the green screen capture on the right. And there you can be able to sign up for your local chapter news where the arrow is pointing. And then also make sure to go where the yellow highlight is. That's for the weekly e-newsletter before you hit Save Changes. Let's go to the next slide. This is what you get if you from the headquarters. This is a member exclusive. It shows you a lot of national educational stuff that's coming up, and many of the ticker talks and stock ups that are there. It comes out in the close of business on Thursday. So if you signed up for it and you're not getting it, check your spam filter. And I think we have a couple of them that Ken, I think you're going to be working on pretty soon here. This is actually so big, or so tiny, I can't even read what I have. But I'm pointing to the first cuts, and I think we have I think is it a stock up on the 13th of November or 12th, something like that. Anyway, go take a look at it. Let's go to our next slide. You can also connect with us on our local chapter Facebook page. This is for both the DC chapter and the Maryland chapter. Again, it's a way to be able to connect with people that aren't necessarily members in Better Investing, but may be interested in our type of investing. So go there and be able to connect. If you have a club and you're doing stuff, link to us or like us, and then we'll be able to do the same for you backwards. Next slide. Here's the stuff coming from the Maryland chapter, and we don't have anyone presenting from the Maryland chapter tonight, but they're having an interesting first ever game night or game day that they're going to be doing on December 13th at the South Bowie Library. They're going to have several different investment games that you may find interesting, and it's a great way to do some social events. It's not too far for many people where Bowie is. You're right, you're inside the DC metropolitan area. So on a Saturday, it should be pretty easy to get over to. So even if you're not in the Maryland chapter, please consider going there. Next slide. Cheryl, tell us what we have coming up in the DC chapter.
Well, we've got, besides the digging into the BI magazine, we've also got our two model clubs, the Northern Virginia McNova Club and the MCMC Montgomery County, Maryland Model Club as well. We've got a couple of other things, but we're getting a little slow getting them up there. Definitely please tune in, and we will have some more things up on the screen.
Let's keep going. All right, so this is one of my clubs. This is the Montgomery County Model Investment Club. We started in 2017. This is a picture of more than just the people in my club, but we get together with several other clubs on a quarterly basis, turn it into a potluck, and we just sit around and chat. We like to eat, and we also like to talk about investing. So if you're anywhere in the Silver Spring area, let us know. It's usually the second Saturday of every third month. So I think our next one's going to be in December. But what we like to do is just sort of get together with folks. We are going to, with our education on November 19th, is we're going to be looking at the balance sheet. And then we also have, we haven't fully decided yet, but there are three stock ideas. It's Descartes, UFPT, and IPAR. So please come. They're free and you're welcome to participate. Let's go to the next slide. Cheryl.
All right, this is for the Model Investment Club of Northern Virginia, otherwise known as McNova. We were started in 2008. We were one of the original model clubs, just one of, not the. And with right now we have 14 partners. The next meeting's on November 18th, which is the third Tuesday of the month from 7 to 9 p.m. It's online, and there's the link to join it online, and MCMC is online as well, and they have a link on their slide. The education is going to be validating your SSG judgments, which was presented on Ticker Talk back in September. Thank you, Ken. And our person who was doing the education had a fall, and so we just kind of stuck that in there, but we're very glad to listen to that during our meeting. And the stock to study is going to be Global X, S&P World EX Australia. The ticker is GARP. It's an ETF. And guests are always welcome to join us.
Next slide. Ken, why don't you tell us what you guys do up in mid-Michigan?
Oh, we do lots of different programs. We run a roundtable program that Mark and I have been doing for over 16 years. We'd love to add your name to our guest list. We have about 3,000 people on our guest list, and we'd love to add yours and then inform you about all the programs we're running. We'll be running a Jamboree program in January where we're going to be soliciting portfolios from clubs in our area and throughout the country, and we're going to be remarking on those portfolios. However, it's not going to be investment advice, but it will be some ideas for people to consider as we look at some of these portfolios. We also run a bull session through my chapter and Manifest Investing. Those sessions are every Tuesday at 2:00 in the afternoon. And if you'd like to register for them, I think the guy that's going to follow me can give you more information about that.
I think he will. Let's go to the next slide. Ken or Mark, go right ahead.
Oh, I'm up. Cool. Yeah, you're all invited to join us on those Tuesday afternoon sessions at 2. It's just a freewheeling discussion of stuff that people are interested in, and you guys have taken us down some fascinating paths, so you're invited to that. The Investing Roundtable is that last Tuesday of every month it's actually now 7 p.m. Eastern Time. We rolled it back an hour, and then we're going to be covering an excerpt from that Best Small Company presentation that we made this weekend here in a few minutes, and yeah, we do a Groundhog Challenge contest from Groundhog Day to Groundhog Day. So if you have questions about any of this stuff, my email address is down at the bottom of the page. You can get to event information just by simply typing in manifestinvesting.com/events. And that is a public link, and we don't keep track of you or anything like that. You can just figure out what's going on and decide what's good for you.
Mark, I think we should tell them also that they can go to the Manifest Investing channel on YouTube and see 16 years of programming from Manifest Investing and from the Mid-Michigan chapter. It's all right there for people to take a look at and for you to enjoy.
Absolutely.
And Mark, which one of those two people are you in that lower right-hand corner?
At this time of year, it's hard to tell.
Well, I think we have hit one more slide, and I think we'll figure it out.
Okay.
Just for you, Mark, just to be able to know that you should feel love. Let's continue on. Cheryl, tell us about the Club Connect program.
The Club Connect program is wonderful. It is for clubs that are looking for new members, and it's a way to advertise to the community to perhaps get new members into your club and build up the blood there. And also it is for individual investors who decide they just are not doing it alone anymore, that they want to do it within a group. And so you can look to see what clubs have put their paperwork in and see if one interests you or it could be a good match. But anyway, that is the deal, that either the clubs or the individuals put in paperwork, and then they get to interact with one another.
Very good. So again, this is called Digging into BI because we want you to dig into your BI magazine. And again, I've asked this a few times over the years that most people wait for it to come in the post office box, but you can get it electronically. The November issue came out in early October. You can also see over on the left-hand side, that's it from the app. You can be able to look at all of this on a tablet, laptop, smartphone, any other electronic devices. So consider that as a way to do it while you're waiting for your latest issue of the magazine to come on out. Let's go to the next slide. One of the things that, always when we have these featured stocks, a stock to study and the undervalued feature, there's always more additional information that they don't have in the magazine. And you can get that if you see where that red arrow is over on the left-hand side for the analyst reports and other resources. But to get to that, you really need to be online and signed up for it. And look at that Better Investing magazine for mobile devices. If you click there, it will be able to walk you through the steps you need to be able to get the mobile device to go forward. From there, you can go where that green focus is in the center where it says View Magazine Issues, and then you can look at all of the electronic ones that are there. So let's go to the next slide. And Mark, I'm sitting there going through and reading my November issue. And wait a minute, the first thing that I'm shocked is that this is a picture of you from this century. So congratulations. Usually you have those 1980 photos of you, but I really like it. And I like the quote that you put in there, married 43 years and she still likes me. Congratulations. Anything you want to
find
add?
that hard to believe, Kevin, but it's true.
I haven't been able to have anyone listen to me for 4 years. Then they get rid of me. Anyway, anything that you've learned over your years? You have a couple quotes in there. Anything you want to pass on from that story?
I think the one that I got a kick out of, because she expected a different answer. Well, the question was investments I'd rather forget. And I basically said, well, none. I don't want to forget the lessons learned, like the time I picked Body Central for the roundtable. And Ken's laughing. And I did it because it had no long-term debt, and what could possibly go wrong? And it was bankrupt within a couple of months. So I learned a lot from that, so I don't want to forget that.
Good point. Good point. Let's continue on. All right, so we also like to be able to feature events that are going on throughout the community. This one's a little on the sparse time because a lot of stuff was just happened in October, but South Florida does a lot of good things. They have a Learn and Earn program. One's going to be this Saturday. And what's great is so many of these events are free and online, so you don't have to go down to South Florida, although maybe it'd be a nice time to head down there. But they're going to show you how to complete the SSG, and they too are looking at how to use the stock to study from the magazine to sort of help complete that. So take a look at it and see what's going on. But I think we won't get too many more events going on until after the first of the year. So let's continue on. I think we're ready to look at our first two stocks. We're going to do the stock to study and undervalued feature first, Cheryl, and then me. So take it away, Cheryl.
So I wonder if South Florida and I will get together and discuss filling this out.
There you go.
Good evening. I'm Cheryl Patterson. I'm the president of the DC Regional Chapter and a member of two investment clubs, the Model Investment Club of Northern Virginia and Happy Destiny Investment Club. FactSet Research Systems is the stock to study in the November issue of Better Investing magazine and was also found in the financial services sector of the Better Investing ticker heat map. Before founding FactSet, Howard, Willie, and Charles J. Chuck Snyder were colleagues at an investment firm on Wall Street. As computers became more prominent at the end of the 1970s, Willie and Snyder saw an industry changing and an opportunity. Willie, who served as director of research, invented a comprehensive 4-page financial overview of a company, which included fundamentals, key ratios, and other critical information, a FactSet. Snyder, previously director of computer research, licensed data from third-party providers to build the FactSets on a shared mainframe. Financial industry professionals could order a FactSet on a particular company, and bicycle messengers would deliver the printed report directly to those clients. They continued this approach until personal computers and modems became a more viable alternative to bicycle messengers. FactSet markets subscriptions, providing clients with access to its comprehensive suites of financial databases, workflow aids, and analytical tools. Clients in the global investment community include bankers, partners, asset and wealth managers, asset owners and corporate users, hedge funds, private equity, and venture capital professionals. Switching data providers can prove to be an expensive and cumbersome process. Members of the Editorial Advisory and Securities Review Committee remarked that FactSet, therefore, tends to be a sticky business, successfully retaining clients. In fiscal year 2024, its retention rate was greater than 95% in annual subscription value. Measured as a percentage of clients, the annual retention rate is 90%. That stickiness has contributed to its track record of relatively steady growth. Committee members acknowledged, however, that integrating recent acquisitions somewhat slowed the company's growth rate. Increased investments in generative artificial intelligence technology and higher bonus payments to employees have also squeezed the company's margins. The growing cost pressures hitting the company's customer base affect the affordability of FactSet's offerings. Another challenge is the continued flow of funds toward passive investments and away from the active offerings that are more lucrative. Those influences may help account for the stock's anemic showing in recent quarters. The stock's $373.32 close on August 29th was 25.3% below the 52-week high of $499.87 on November 14th. The stock underperformed the S&P 500 index, which over the same time frame decreased from 0.9% to $6,460.26 from a high of $6,401.07 on August 28th. Also, the company just underwent a changeover in top management. Sanoki Viswanathan, 50, became the new chief executive officer on September 8th. He previously was a senior executive at JP Morgan Chase for 15 years. At the end of fiscal year 2023, FactSet served 189,972 financial professionals in 7,921 client organizations. A year later, the tallies were higher. At the close of fiscal 2024, which ended on August 31st, 2024, FactSet served 216,381 financial professionals, up 13.9% from the year before. The client count stood at 8,217, up 3.7% from 2023. In 2024, FactSet operated 35 offices in 20 countries. It had 12,398 employees, 1.3% more than the year before. About 69% of its employees were located in India and the Philippines. The United States accounted for $1.3 billion, or 60.8% of total revenues. International markets contributed $862.7 million, 39.2%. Reportable segments are structured geographically in 2024. The Americas segment generated revenues of $1.4 billion, or 64.5% of the total. Europe, the Middle East, and Africa accounted for $563 million, or 25.6%. The United Kingdom generated $222 million, or 10.1%. Other European countries produced $341 million, or 15.5%. The company operates offices in Bulgaria, England, France, Germany, Italy, Ireland, Latvia, Luxembourg, the Netherlands, Sweden, and the United Arab Emirates. Competitors include MSCI, S&P Global, and SS+C Technology Holdings. Morningstar reported, FactSet also competes with top industry providers. Privately held Bloomberg holds about a 33% market share. According to Standard & Poor's, Refinitiv Elcon, a unit of London Stock Exchange Group, controls about 20%, and S&P Capital IQ Market Intelligence, a unit of S&P Global, 6%. In contrast, FactSet market shares in an estimated 4 to 5%. It appears to hold pricing advantage over some of the competition. Its standard annual subscription fee is about $12,000. In contrast, Bloomberg reportedly charges $24,000 to $27,000, although it offers a stripped-down standard subscription at $22,000.
5 minutes, Cheryl, 5 minutes.
Okay. In January, FactSet launched Pitch Creator, an AI-powered aid for investment bankers. It automates time-consuming tasks related to pitch book creation. Solution also leverages FactSet Mercury, an AI-powered chatbot, adding analysis of market data and company research. Last November, FactSet acquired Platform, public companies, and their advisors. In March 2022, they paid a net $1.9 billion in cash to acquire CGS Global Service. The business is a key record keeper, maintaining a database of 60 data elements, uniquely identifying more than 50 million global financial instruments. Its database is the foundation for security master files relied upon for critical financial office functions. In October 2021, the company paid a net $50 million in cash for Cobalt Software, a leading portfolio monitoring platform for the private capital industry. The company introduced a quarterly cash dividend in September 2005, setting the initial payout at 20 cents. It has risen annually from that level over the past 16 years. In May, the company raised the quarterly payment 5.8% to $1.10 from $1.04. On August 29th, the yield stood at 1.2%. FactSet's relatively small size can be an advantage when compared to its much larger competitors in the data retrieval market, such as Bloomberg, MSCI, and S&P Global. Substantially lower price compared to the competition tends to attract niche players. How will its smaller size affect the evident need to invest in artificial intelligence, both for internal use and as integration into customer products? Until now, FDS has increased its capital spending, the company's long and consistent record of buying back its own shares over the period of an average rate of 9.1%, roughly in line with its peer group. FDS margins, while decent, lag behind those of larger competitors. Return on equity averages a healthy 34%, though somewhat lower in recent years compared to a decade ago.
2 minutes, Cheryl, 2 minutes.
FactSet research shows as tops in financial data and stock exchanges with a projected annual return of 15.6% in the sweet spot, a high quality rating of 82, and a sales growth estimate of 7.7%. an expected return on equity of 28.4%, an annual dividend yield of 0.9%. Stock to Study provides a complete comparison of 3 companies that are peers or competition to FactSet. While FactSet is a medium-sized company, most of its peers are large. FactSet is the only company in calendar year 2025 and is close to its larger cousins in both annual and quarterly sales data. Earnings per share data is the highest percent quarterly change with a lower earnings per share growth rate over a 10-year period. The big slide in the company's share price started in July can be attributed to a quarterly earning miss compared with analyst consensus, as well as significant sale of stock by insiders in response to the arrival of a new CEO. In early September, several analysts lowered their earnings targets for the company, now positioning the beaten down shares in a more positive light for an investment perspective. Here we see the pre-tax profit on sales, as well as the return on equity. You can see FactSet is the black line, and they are keeping somewhat with their peers. Total debt, as well as debt to capital, FactSet seems to be on the bottom of the groupings. Here we have the forecast sales growth rate. The growth rate forecast is 5.6%, which comes to a projected sale of 3,049 millions. For the forecast earnings per share growth rate, I listed 6.8%, and that gave me a projected earnings per share of 21.61.
1 minute, Cheryl, 1 minute.
And here is the historic high PE. I gave that a 27. Again, that seems to be reasonable in terms of the numbers and the fact that they are slightly dipping downwards. They're from 24 to 25. And so that gave me a forecasted stock price for high of $583.50. And with the low stock forecast used 15, again, you can see the dip between 24 and 25 gave me a low stock price of $233.30, and I lowered that a little bit to match the 80% of $228.20. Here you can see the potential gain versus loss. The upside down ratio is 5.2 to 1, which puts it solidly in the buy sector. You can see here the historical payout. They have come down since 2022 in their payout, but we will see how that works out in the future. Conclusion is FDS is a medium-sized company with a Morningstar financial grade of A. It's a well-managed company in terms of taking on AI, acquiring AI companies to boost up the company and to take it into the future. It's currently undervalued, trading well below the 5-year average of 18.3 to 30.7. FDS is a buy up to 317 with the buy price of 305 to satisfy the 3 to 1 and 15% total return. It may be a worthy candidate for watch lists and after further research, a possible buy, but do take into considerations the downsides that I did mention in my presentation. And that is it.
Thank you very much, Cheryl. Well, again, we have a really nice crowd here tonight, and I noticed, I counted out there's 15 people in the audience that have done presentations right where we are, and this is our 5th anniversary of doing this, and we want to thank all of you that have participated in that. And I think we have a good crowd because of the people coming after me. So let me just tell you a little bit about Robert Half. They're the undervalued feature this week. And they also had a first cut that was in June. And so let's just go on to the next slide and we'll sort of walk through it. So I always like to look at the article, and they had some interesting things right off the beginning. That when the economy rises and falls, so does the outlook for a staffing corporation like Robert Half. Highly cyclical. They react very strongly to peaks and valleys in hiring activity. In fact, you could probably even look at their visual analysis and see how things have been going um, for a lot of companies across the country right now. They like it because it has a strong balance sheet with no meaningful debt. But we just saw Mark talk about how he had one with no debt and it went under in 4 months. No, I'm not predicting that for Robert Half, but the fact is that this is a company that I find it's a little hard to figure out why they came with this one. But I do like to be able to look at what they use as a rationale. And I think that's the important thing when you go through it, even if you look at it and you think it's a little off. So let's go to the next slide. And again, when you look at this visual analysis, Ken, you like to talk about up, straight, and parallel. How about if you got 2 out of the 3? Is that pretty good?
No comment, Kevin.
No, please give us your comment. We don't have up, but how about down, straight, and parallel? What's that mean?
Well, I would be remarking to my audiences that this is not a company I would go further with. There's too many great stocks out there to look at a stock like this.
Yeah. Well, and again, you see it where it's trading down near its 52-week low. I felt like when they ended up making this decision, they probably were in the back seat next to Cheech and Chong there, trying to be able to get themselves a little bit of a bump. Because when they presented this in August of 20, late August, it was selling at 37. It closed today at 25.55, and it has dropped 63, almost 64% since the first of the year. You just look at it and you go, what are they thinking?
Well, Kevin, I can add just a little bit of color to this. I used to serve on that committee, so I know the people. They're smart. There's no doubt about it. And what happens here with the undervalued company a lot of the time is they're not looking necessarily at a 5-year horizon. They really are looking at a shorter, 12 to 18 month kind of a horizon. And they usually center their discussion around some form of catalyst or turnaround. And I think that's a reasonable discussion or thought to have. If you're not thinking about this as necessarily a long-term investment, but a catalyst-driven turnaround, I'm trying to give them some rope here.
No, it's true. And if you look at it, they're looking to be able to grow. I say 15%, but I think it's really 18% is sort of their goal, or 20%. So if you do some of the math on that, you only have to be able to get to like $39 to be able to get that when you throw in dividends. But because this thing has cratered so much in just the last couple months, you have to wonder what's going on. So let's just go through some of this and see what is it like Mark was saying, what's the catalyst going forward. So let's go to the next slide. So this is a turnaround company. And in fact, I looked it up. The last time I talked about a turnaround was when Mark was here and they had me do Brown and Foreman. It's a great example to be able to see of a turnaround company. Get these slides. There's hyperlinks to all these different places that you can find it. Articles that I found that sort of help you understand a little bit more about turnarounds. But I think a little bit of that screen capture in the upper right, that Sergeant, the character is Sergeant Farrell, played by Bill Paxton in Edge of Tomorrow. And it's just like, what are they thinking? And to me, the biggest thing with these turnarounds is like Mark was talking about is what is the catalyst going forward? And do they have enough financial strength to be able to make it out of whatever their downturn is? But if you're a newcomer, I would stay away from this company, just to be flat out. And even if you're not a newcomer, you have to really think hard about what's going on. But let's go to the next slide. So here's a little bit of the background on it. They're in the S&P 600, and they're a medium-sized company by sales. They started originally in 1948 in New York City when Robert Half, um, started this company, a staffing company, with his wife, Maxine. And they had the company until they sold it in '86 to the people that took it IPO. And the CEO for that period, I forget his name, he stepped down at the end of 2019. And this CEO has been there since 2019. Let's go back. I always like to do this. I didn't do it. Let's go back one slide and look at that visual analysis again, or two slides. I'm sorry. If he came in 2019, if you can highlight exactly where 19 is on that thing, and one of the things George Nicholson talked about was you can sort of put a star in your visual analysis and see what's been going on since that person got in there. And if you look at it, you're like, okay, yeah, there is a global pandemic. I understand that. But something else is fundamentally happening, and we have to figure out, it's maybe beyond the help of the CEO, but it could be a larger issue with what's going on in terms of staffing and the like. So let's go advance up to those two slides. And so I also like to look at the CFRA report. Again, they're in talent. They provide one of the largest providers of talent solutions. Most of their sales are in the U.S., as you can see. The business segment, the contract talent solutions, that's basically the temp workers. And they're specialized. They're usually accountants, lawyers, financial folks. These aren't necessarily straight administrative positions. The permanent placement solutions, that's the ones where they help find you a job and they get a percentage of what goes from the company when they get hired. The other part of it is the Proclivity Consulting is actually the remnants of the old Arthur Andersen when they used to be the big five accounting firms. Now there's four, and they do some in-house stuff where they can do some consulting on financial stuff. And their competitors are basically going to be Ernst & Young, Price Waterhouse, Coopers, Deloitte. What else what's the other one I'm missing?
Booz Allen.
No, it wasn't Booz Allen, but it's something like that. Anyway, we could also throw Booz Allen into this area though. But those are sort of the people they compete with, and that's really the one area that's really growing from them. And that's not even growing at big numbers, but that's where they are in that 34%. So that means the rest of it is really sort of dragging things down. Let's go to the next slide.
5 minutes, Kevin. 5 minutes.
So, we've seen some people talk about it. I know Ken has done stuff on how to look at using AI to help sort of figure things out. So I was just trying to see what are their growth drivers and what's going on. And you can sort of see what the growth drivers of their TAM, which is their total addressable market. And you can sort of take a look at it. It's all nice, but it doesn't correspond with what I'm seeing on the visual analysis at the moment. And it's also telling me that maybe our economy isn't as strong as some people would have us believe, but that's a further discussion. But this is sort of a canary in the coal mine. Let's go to the next slide. Here's sort of their primary targets. They're looking to do specialized hiring and the like. And again, you see almost 60% of their sales are in the temporary and permanent, or in the temporary staffing. And if people aren't hiring right now or filling that stuff, that area is just going to really, really dry up. Let's go to the next slide. Here's some stuff from Manifest. Again, the numbers aren't awful. The quality is low, yes, but I mean the core score in 170 isn't too bad. But again, combined with everything else, if you look at the sales growth forecast, if you can highlight that, Cheryl, at 1.6, that's really, really anemic. The PAR is really almost too good to be true. And like Ken, I like to use that prove as sort of a cross check against my projected average return. That would probably be my more optimistic thing. But again, it really gets to the premise is, do you think that this company is going to be well positioned for whenever that turnaround comes? And again, we're trying to project out 5 years on our SSG, even though the undervalued feature is only looking to go out 18 months to 2 years. But I'm not getting enough that really excites me about it. Let's go one more slide. I like to look at this. This is kind of interesting. The secondary metrics. If you look at the blue, that's their shares outstanding. They're coming down. That's great. If you see the green, that's a dividend that's going up. That's good. And then you can see the total debt. It sort of went up and then went down. The one thing to keep in mind is that total debt in the 25 cycle is that they haven't factored in what's going to be in that full cycle. So that's the reason why it goes straight down there. So their debt's sort of up there, but not horrendously poor. But again, those quarterly numbers just look awful. So let's continue on. So my
2 minutes,
conclusion,
Kevin, 2 minutes.
well, we'll be done a lot sooner than that. This is a medium-sized, slow-growth company. You know, I just I gave you a completed SSG. You can take a look at it, but it really requires you to sort of jump beyond what the quality prospects would be to think it's going to be there. And like Mark said, if there's a catalyst that you can see there, I can see they're being well positioned, but I'd maybe wait until you sort of see that we're starting to get a little bit more of an uptick in our economy to be able to do that. I know Jamie Dimon has been very bearish on where we are right now, but it's a highly cyclical company. And I think the near-term prospects are weak, even in the most optimistic scenario. So I really don't even say do anything more with it other than pass. So that's the first time I've told you no on in 5 years of doing these presentations, but I just couldn't find any redeeming feature in this one. Let's go to the next slide. And now we're going to have the fun bunch coming on in from Michigan. And it's going to be Ken Kavula talking about United Therapeutics, which also is on the ticker heat map. And Mark's going to talk about Badger Meter, which is also on the first cut. And I'm just going to turn it over to the Sunshine Boys and let them shine.
Hey, it was sunny.
I'll heckle in between, but for now, shine.
All right. Well, thank you, Kevin. And what Ken and I will be talking about is basically an excerpt from our program on Saturday, where we basically attempt to select 20 best small companies. That's not small cap, it's small companies, faster growing, promising companies. And we've been doing this now for, gosh, Ken, can you believe it? 20 years? Wow. And actually it predates that. That's just what we admit to. But this was our selection. So let's go ahead and go to the next slide. Here's our track record. Just it's not bragging when it's real, and it's real. For the last several years, we've been doing fairly well, basically beating the market 15 out of the last 20 years. I draw your attention to 215 through 225 because Forbes abandoned us back in 2014. And the reason the break point is there is Ken and I basically sat down and said, well, let's just keep doing it. Even if Forbes is going to go off and chase unicorns, let's basically pick great small companies, much in the same manner as a modern investment club. So Ken, would you agree with that assessment? Or?
Absolutely, Mark. We looked at each other and we said, we can do this. And we can make the list a lot shorter and focus it a lot more. So we started in 2015, and we've had a pretty decent record since then.
Yep, good stuff. So let's go to the next slide. A little more stuff. So Ken, why don't you walk us through what we're basically thinking?
Well, we started with the premise that you should be looking for everything in a small company that you look for in a medium-sized company or a large company, that you need history, you need up, straight, and parallel, you need the kind of things that you want to see in your medium and larger companies. And it's okay to consider non-traditional investing, as Mr. Nicholson used to refer to it as, but keep that to a part of your portfolio. Don't let it overwhelm your portfolio. Nicholson suggested 20 to 25% in non-traditional, code word for speculation. And we're going to do that on our list as well. We're going to give you some really great up, straight, and parallels, but we're also going to take a rocket shot occasionally and look for something that might turn out to be a really great investment without anything other than hope. We know sales matter. We want them greater than 10%. We want revenues. We think a small company probably has revenues somewhere less than around $3 billion. I know that's different from what Better Investing's been saying for the last 8 or 10 years, but we think $3 billion up to that point is probably still pretty small. At the same time, we don't want to go too small, so we leave a $10 million base limit, nothing smaller than that, and a stock price, we want that stock price to be more than $5. If we're looking at asset-based businesses, and Forbes never used to look at these kind of businesses, but we do, then we're going to look at their growth expectations as an asset-based business, base it on assets, base it on book value, base it on things like that. And for a bank, a small bank, according to Ross Meredith, our Better Investing bank specialist, a small bank would be about less than $25 billion in assets. We want excellent quality all the way around. We want a good PAR, a good potential annualized return. We want it validated by proof, and that means we're going to use the manifest rank, which combines these ideas into a single score, and we want that score to stay pretty decent. We're ready to put 3 or 4 non-core holdings onto the list, but that leaves room for 16 or 17 core holdings then.
And then it kind of goes without saying, but there was one more factor, and we get to the bottom and end of an analysis of a company. You say, would Kevin Gologly yearn for this company? And if the answer to that is yes, we continue with it. So there you go.
Thank you very much.
Next slide, please. All right, just a real quick lesson in why some of this stuff drives us so feverishly. What you're looking at is a list of the companies, a list of funds, mutual funds and exchange traded funds that have the best performance. They are ranked by their longer term performance over the last 10 years, except with the exceptions being the ones that have highlighted dates. So they're different time periods. That means that their benchmarks would be different, but we're basically stacking up the performance of the best funds out there. We mine these for ideas. But the thing we really want to draw your attention to, these are the top, by the way, there's only 19 funds on the planet that beat the market by more than 5% over the trailing 10 years. I mean, that's kind of a way to really put the challenge that we face as Investment Club and Better Investing investors into context. And the ones that are designed for success, and we've got the column highlighted, is that growth column. That's the average sales growth of the companies in the portfolios. And that's why when you hear Ken talking so much about 14, 15, 16% growth rates, that's why he is doing that. So we're out there looking for those type of companies.
Yeah, things have changed since the 1940s. Dividends are not 5 or 6% anymore. And if you're going to reach that extremely aggressive goal of beating the market by 5 points, then you need sales growth much more than you did when you were investing in the 40s and the 50s.
Yeah, absolutely. Okay, next slide, please. All right, so we just thought we'd share. These are some of the places we turn to for ideas, stocks to study, and a lot of it comes from the people of our community, extended community, and these are some great sources there of people. In fact, Maryland's own Ty Hughes there in the helmet from his bike race, but not to single anybody out, but these are the places that we churn and do the shopping for the small companies. Next slide, please. So with that, we'll go in and have Ken take care of United Therapeutics for us.
This is the kind of slide we put together on Saturday morning, just giving people a taste of the company. And I'm going to walk a little bit deeper into United Therapeutics. This is not a stock study for you to decide that you want to buy something. This is a stock study to get you interested in the concept. And we'll start with the visual analysis. That's a picture, and that's all I need to show a lot of folks that are value investors or that are growth investors. That's all I need to show you, that this has consistent sales, consistent pre-tax profit margins and consistent earnings. And they've been going on since the pandemic right here. The next slide, if you would. The name of the company is United Therapeutics, ticker UTHR. Next slide. It's a public benefit corporation, and that's something that might be new to many of you in the audience, but they're structured as a public benefit corporation. It's in their charter, and they must meet certain criteria in order to maintain that designation. The company was founded many years ago to save the founder's daughter's life. She had a rare lung disease called pulmonary arterial hypertension, and she was dying. And the founder of the company thought that he could discover a drug that would help her stay alive. The good news is she's still alive today, and he did discover the drug to help her. Next slide. The company is very specific about where it is in its growth rate. And if you look at that bottom arrow there, the kind of turquoise colored arrow, this is the foundational, if you will, revenue for the entire company, and it goes well out into the future. And the foundational revenue is based on a very, very robust list of drugs that deal with some of these very rare hypertension types that exist in small populations throughout the world. United Therapeutics just blew everything out of the water at their last earnings report, went up over 28% in a single day, and it did it because its drugs have just proved to be the gold standard, and the sales for those drugs have been expanding. But UTHR is dreaming big, and it's counting on innovation. It's been constantly adding drugs to its stable of performers so that it has a pipeline with many, many of its drugs in first stage, second stage, third stage trials, and it plans on adding new drugs to the drugs that are forming the basic foundation for revenue at the moment. And then it's even dreaming bigger, because it's beginning to address the shortage of organs that exist in the human population, and it's looking to create ways that people can receive an organ without having to wait for a human transplant. Next slide. This is what drew me to the company in the first place. They deal with 4 different platforms, and you can see those down the left side of the slide in the red background right there. And they're talking about 4 different organs from the human body: the liver, the kidney, the heart, and the lungs. And you can see that they're looking for all different types of ways to bring these organs to human beings without necessarily having to have a human transplant. They've had a lot of success with their xenotransplantation. That's taking an organ, changing perhaps some of the genetics within the organ, and then transplanting it into a human being. You might have read most recently about UTHR's successful transplant of a pig kidney into a human being. It lasted for quite a few months. They learned an awful lot, and they're continuing these experiments. We hope it's going to end up in the same place that the first human heart transplant ended up when it was in my history itself. I can think back to the day I heard that happening and thought it was science fiction then, and I'm thinking about pig kidneys, and it might be science fiction now, but I see the possibility of it becoming reality. Next slide. There's the value line annual rates box. Here's the manifest investing sales growth numbers with an EPS 5-year forecast. I have the numbers circled, just kind of absorb them. 12s, 13s, 11.5s, $47 6 plus for earnings 5 years from now. Next page, next slide. I've set growth forecasts at 12% each. That gives me a $46.50 5 year from now earnings. I think those are certainly extremely reasonable numbers for United Therapeutics. Next slide. This is the history, the last 5 years. Notice the average PE of 13.6. Both Value Line and Manifest suggest that the PE will expand in the next 5 years. So I'm going to choose a high so I'm going to look at an expanded PE when I make my judgments in section 4 of the SSG. Next slide. I'm choosing 19 for the high going forward, the high average going forward, 13 for the low average going forward. Add those together, you get 32. That's an average PE of 16 5 years from now. That's a little bit of PE expansion. My choice of 340, 310 for the future low price is already more than 20% below the current price of 445.43. Just a note, I presented this stock in March of 2025, 6 months or so ago, at the Mid-Michigan Roundtable. And at that time, it was trading at $312.54. Notice the current price today. Next slide. Again, I'm looking at Value Line numbers. I'm looking at some numbers from my own SSG. That's the almost 11% to the almost 15% returns using my forecasts. I'm looking at the par number from Manifest Investing. I think that my study numbers are well within the bounds of the numbers coming from Value Line and from Manifest Investing. They appear to be extremely reasonable. One more slide, Mark. Based on my judgments, UTHR appears to be a buy at a price of $440 approximately, and I would suggest it's worth a future study. Please do your own homework. Do not buy anything based on a cursory examination as this was this evening.
Thanks, Ken. Kevin, are you yearning for United Therapeutics?
I am. I'm really intrigued with it. So
Got a high
I'm going
yearning.
to listen to him. And if you talk about hot dogs, I'm out of here.
Hey, speaking of hot dogs, Portillo's does report earnings tomorrow morning. So Kevin, I expect you to be all over that. Let's talk about Badger Meter. This is not a new company. It's not a sexy or a frisky company. It's been around for over 100 years. They do a very simple thing. They measure the flow of water and they monitor the quality of water. So any place, whether that be a city or a factory or wherever water is used, and I think it's used a lot, that these guys are experts in how much and how good is it. You see a quick snapshot of the visual analysis from a study, a fairly recent study for the small company presentation we made this weekend. And I think it qualifies as up, straight, and parallel with a little bit of a hiccup there towards the end of the last decade, but pretty good picture. So a lot of experience, a lot of expertise, a lot of respect, and up, straight, and parallel. Next slide, please. Here's the source of it. On your Better Investing tools, you can actually find where there is a predefined screen to go searching for small companies. It's one of Ken's favorite places. He checks it weekly, if not every other week, and just watching for ideas to percolate, into our field of vision. So you just click on that small company. Next slide, please. You will get this picture. Badger Meter has been appearing in this output of potential small company studies for most of the weeks, as far as I can remember, probably the last 6 months. So it's been there. You can click on any one of these on those blue tabs on the left and get a quick preview of what it looks like. And literally we will sit there and just click through these and, yep, that one's good. And then another one you might just throw out like Kevin did with Robert Half tonight. You know, if it doesn't look pretty on the right, move on to the next one. There's a lot of good companies out there. Next slide, please. And of course, here's what it looks like on one of our trusted sources. We lean on Value Line often. A couple of things that work here, a decent return. You can see that the 3 to 5 year annualized total return forecast is between 10 and 20%. So that's kind of a checkbox. You can see that the current value of Badger Meter, because they had a little bit of a rough spot in their business, the price is down a little bit. So it is actually approaching the value line. You can see that the price is down over the last several months. Notice that this company has an unusually high PE ratio, but it's had an unusually high PE ratio for a long time, especially as they expand into more and more things as our demand and desire for water increases. So again, PEs in that 35 to 40 neighborhood are not terribly unusual for this company. It's a characteristic. Don't know how long it will last, but it is a current characteristic. You can also see that their operating margins have been gently expanding. So you basically have a kind of a triple play situation here with this company also. Next slide, please. Again, I typically, when I do a stock selection guide, I shut everything off and focus on the top line. I want to understand sales. As we're looking for our best small companies, this is probably the most important parameter. We want double-digit growth. And what you're looking at here is a company that's a little bit bumpy, economically sensitive a little bit, but not bad. And a growth rate of 11%, call it 10 to 12%, appears to be reasonable. Next slide, please. All right, here's my preferred procedure. We use the preferred procedure for every single company we study at Manifest Investing. So you can see the judgments. There's your 11% sales growth. I actually used a slightly higher margin, so a little bit less expense there. You can see that as you trek down the preferred procedure, I'd like to draw your attention to that shares outstanding column. This is something that we've been talking about a lot at Manifest. We're doing more and more research into this area, but you always want to be mindful of the shares outstanding trend. And what you're looking at here is Value Line is basically calling for a drop down to 28 million shares outstanding in their 3 to 5 year forecast. I chose to actually go up. The reason I chose that is that's what the company's been doing. And by the way, those two graphs on the right, those are the same information. But you got to watch the scale on your charts, because that one on the bottom looks like it's dramatically increasing. The numbers up on the top chart, because of the scale, are completely different. Now, we use the one up at the top to basically do an empirical forecast for the companies that we study. I think that it's reasonable to assume, until they show us otherwise, that the shares are going to stay pretty much the same, perhaps even gently up. So again, the message here is know what your shares outstanding profile looks like. It can actually help you when Kevin asks the question, where's this company in its life cycle? Because how they treat their shares outstanding will often give you a clue in that area also. Next slide, please. So we take our $9 in earnings and we start thinking about what are we going to have for a PE ratio for this company. Again, I switched to a 10-year look back. You can see a lot of 40s and 50s and 30s on the chart. I also like to go out to a third-party source and basically look at real PE ratios over time, close one eye and see if that makes sense with what I'm thinking about as I complete my guide. And my knee-jerk reaction is that I'm happy with a PE ratio in the upper 30s for an average projected PE ratio. Next slide, please. So here you see that I will have used on average high PE of 45, a low of 30, and this Ken just demonstrated. 45 plus 30 is 75 divided by 2. That's 37.5, call it 38. That is the average PE I'm talking about. If any of you have lost consciousness, we'll wait for you to return. There are companies out there that actually exist at those type of levels. And we are just talking about the next 5 years, and that it's not unreasonable. It is a bit assertive. You can see that I basically went with that 1% for the yield, and the average return forecast checks in at about 14.5 on my guide. So pretty decent situation. Again, not the sexiest company in our complete listing, but these are two companies that have the characteristics of fairly high quality, good financial strength, and fairly reliable and stable earnings. So they've got fairly high core scores. And I know that Kevin yearns for a high core score in the companies that he studies also. Next slide, please. I think we're just about done. Here is our list of the 20 companies that we chose. So you can actually see some of the factors that went into it, some of the sources, and where the ideas came from. Kevin, your oddity did make the list there. I think you probably noticed that.
I did.
Yeah. They come from people, they come from clubs, they come from, we scour the Vanguard total. It's actually the Russell 2000 growth component. That's the VTWG is an exchange traded fund that you can scour for ideas, and we found a lot. So Ken, do you have any comments on sources of ideas or
only to make the point, Mark, that this is actually 19 individual companies, and we do have an ETF at the very bottom of the list, RCTR. We're very interested, both of us, in the nuclear revolution. I can remember when nuclear energy was the promise of the future back when I was going to junior high school. It became the most loathed type of power as I matured into adulthood. And today it's being reestablished as maybe one of the few viable alternatives to having no electricity of any kind. We're looking at a number of nuclear companies, and we decided we would handle it on our list rather than trying to pick one. We would handle it by putting a ETF on the list along with the 19 other companies. Last year we chose NUKZ, and this year we're choosing RCTR, both of them strong nuclear exchange traded funds.
Yeah, and in fact, if you want to tune into bull sessions tomorrow, we will disclose a third option, which might even be even better because it has better coverage of the companies that are that Betsy Wills has talked about. Betsy Wills is kind of a small company aficionado out there in the Rocky Mountain chapter out in Colorado, and she's got quite a track record. And so we're going to talk about that.
She's leaning on Wyoming to get a lot of these ideas, Mark. So
she is. So again, from top to bottom, pretty decent list. We're hopeful that it will deliver strong results for us, and got a very high Kevin Globally yearn factor to it.
And just one last thing, if you check the quality column, that's the colored one in the, about a little bit more than halfway across the page there. If you check that quality column, you can probably pick out the 3 or 4 rocket launches that we're kind of looking at as a little bit more dicey, a little bit more speculative than some of our core high quality holdings. You can see them, they're under 50, some of them are under 30, so they're there, and we're acknowledging that they're speculation, but they do not represent more than about 20% of the total portfolio.
Okay, good stuff. Next slide. I think we're done. Yep. Well, I just want to wish you, in case you missed it, happy Halloween and upcoming Thanksgiving. And Kevin, that's not a badger, and in fact, it's not a groundhog. Any idea what that animal is?
Is that a capybara, Mark?
No, it happens to be a beaver, and it's in honor of the beaver moon. We've never had a beaver on one of our slides. And the beaver moon, tomorrow night's full moon is called the beaver moon. It is the brightest and largest moon of the year.
And it's one of the few
Things
animals
you
left that
learn,
we haven't featured on a slide, Mark, okay?
the things you learn by hanging out with investors, finding out about a beaver moon. All right, let's continue on. Thank you very much, Mark and Ken.
Most
So
welcome.
we're going to do a recap of this, and we talk about this is that where it sort of fits on the life cycle. And so there are the four companies again. Let's go to the next slide, Cheryl. And I just sort of guessed on the ones for United Therapeutics and Badger Meter. But Cheryl, why don't you go first, then I'll go.
Okay, FactSet, it's definitely not explosive growth. They've stopped using the bicycles, but still, they're they're moving ahead in AI. So I think that's a good place, putting them kind of halfway in between the explosive growth and mature growth. That hopefully, once things settle down, their new CEO and other things are not so much in the news and affecting things, I think they will definitely have a more run to them.
Okay. And I put Robert Haft over at the end. There is a case to be made that you could make some money with it, that it is going to turn around. But I just think the way things are now is maybe to hold off on it. I don't think you're ever going to get spectacular growth with it. I understand why they sort of put it on there. But my goodness, you got to sort of ignore the last 3 years worth of data. And so for that, I'm going to say, let me see a little bit more consistency out, a little bit of an upturn. But if you want to look at turnarounds, this is one to learn and study from. Now, with those locations, are those where you want? Let's go with you first, Mark. Is that where you want to? Would you want to move BMI somewhere else, like more towards the center, or where do you think?
Yeah, I think I would put it right at the crossroads of explosive growth and mature growth. And you're talking about a 10 to 12% growth rate. They are reinventing some aspects of their business, so they are at least maintaining that type of trajectory. But yeah, I would put them somewhere near that point where it crosses over from explosive to mature. I mean, the company's 100 years old. How much, come on.
Yeah. And how about you, Ken? Is that a good
Well,
spot, or would you move it somewhere
we've
else?
we've made the point in roundtables many times that there's a lot of companies that move up and down this line, and they move up and down this line because they continually reinvent themselves. I think United Therapeutics is in the process right now of moving from a very successful drug company dealing with a fairly narrow range of solutions to a very narrow range of problems. They're moving into a very explosive kind of sector where, if they succeed, they are going to be an extremely explosive growth. So I would move them down the green ball a little bit closer towards the speculative side.
Okay. Thank you very much. All right, let's continue on here. What we say here is we don't necessarily ask you to pick the one that you want to be able to buy today. But what we ask you is that Cheryl will put it up, is that we're going to ask you which one intrigued you enough that you want to do additional research on. And so it's a little different than normally people want to go for a buy. But go ahead and share our poll there. There you go. We can see how the polling is going. Ken, how much does it cost to be able to participate in a poll like this?
It's free.
Don't-
It's absolutely free, but you can't vote twice, okay?
Okay. All right, we're at 77%. That's a pretty good number. And by the way, we have a really nice turnout. And again, we got up to now 16 different people that made presentations popped in. And I think it was probably because they wanted to hear me and Cheryl talk,
Absolutely.
Well, I do have 3 members of the Wolves represented here tonight now. So another one of my investment club members popped in near the beginning of the program, Kevin. So I gave you 3 tonight, okay? So I expect you to bring 3 the next time we invite you out to Michigan.
There you
So
go.
I
That's
think-
good. All right, I think we pretty
there
much
should
have
be some-
stopped. We're about 82%. Let's go ahead and open it out, and we can share the results.
Well, there you go. The groupies turned out.
For those people that don't know, Ken does the dance of the seven veils with whatever stock he presents, and all the ladies sit there and they bat their eyes and go, "Oh, Ken, that's so great!" And he ends up getting these high numbers. Uh,
It's
I'm
very
really shocked that I got
sexist.
2%. I thought I basically steered everyone away from you, but okay. I like the venturesome ones out there that are doing it. But there you are, United Therapeutics, and Ken Kavula in the Dance of the Seven Veils wins. So anyway, with that, Kent, do we have any? We had a fair amount of questions. Anything you want to be able to feed out to our presenters, or again, people in the audience, if you want to raise your hand and be able to talk about any of the particular stocks, that's how you can be able to reach any of us here. And let's go to that picture on slide 87. And that's a picture of us at the last in-person Bink. And that's a lot of the people that have done presentations for us. That wasn't even everyone. That we missed about 5 or 6 folks. But again, it just shows you the wide collection of folks that are participating. And we hope that you will join us in this. So what kind of questions do we have, Kent?
Well, let's see. And looking through, looking through the list here, there's one question for Cheryl, and that is regarding the payout FactSet provides. And I guess the question is mentioned in the article. Does that payout of FactSet include bonus payments? And I'm not quite sure what that means, but Richard, if you want to speak up and
Well, it was mentioned in the article that one of the things that kind of dragged them down in the last couple of quarters has been the fact that they've been giving large bonuses to employees. I would imagine that it has to do with the fact that they're having to attract people who can work with and put out the data for their AI companies that they've acquired. And it really didn't have to do with the dividend. In fact, in one of the slides I put up, dividend growth has kind of come down. But that in terms of bonuses and thing, that's the only thing I can think of that Richard is relating to. And correct me if I'm wrong, Richard.
yeah, we will unmute you if you. There you go. Richard, if you want to speak, you're unmuted.
You're unmuted. I'm unmuted. So the question would be, it's kind of like, I followed Wingstop, and I noticed one of the things that this is a totally off thing, but that Wingstop paid out money to its investors by taking loans to pay off dividends. Is that what FDS did? Did they take money out of their company to pay bonuses, or did they take unsecured loans, and did they run up more debt? Or that's
I'm not seeing that they ran up a lot of debt in the slides that showed the debt to capital. That I'm thinking that they, like I said, that they, now that they're dealing with things that are on a more advanced level with AI, that they're going to have to pay those people that are going to be working with that more money to entice them to come over and work for them, because that's a pretty high income level jobs. But I didn't see that their debt has gone up substantially. I mean, some of it has been to acquire the AI companies. Per se.
You also said, and I think the article mentioned, that 69% of its employees are in India and the Philippines, and I would think that the going rate for employing someone in the India and in the Philippines is far less than employing someone in the States.
I would imagine they are, but again, when you've got people that are in specialized jobs or careers, then they do tend to command a higher salary than, say, someone who was just, doing data processing, hitting a keyboard. But, it really didn't break it down to those kinds of information in the article or in the research that I did. But it did speak to that was one of the things that made their margins go down, was the fact that they were giving out bonuses.
Okay. That's a good discussion. What else do we have?
Yeah. All right, moving on. Speaking of personnel and AI, Ed Rodriguez points out or asks the question, not points out, asks the question in regards to our Robert Half. What is the impact of LinkedIn and in the future artificial intelligence? And Ed, if I butchered that question of yours, I'm going to unmute you and you can clarify if you have any clarification. But that was the way I read the question.
No, I think you got it right, Ken.
So, the impact of LinkedIn and stuff like that. Yeah, I mean, honestly, I don't know. I didn't really get to that level of a review because, again, I just looked at that and I was just like, oh my God, I really don't see how when it's falling like that this may be just one of those companies that cannot recover from it. Maybe the consulting, which is the only thing that's growing, but their growth numbers are not spectacular, even in the consulting part. So sorry, I wish I had more to add to it, but I really didn't go that deep on it.
I do think it's a bit of a bloodbath in the consulting field. And I mean, you can look to Cognizant Technology as an example of how tough the playing field is. And I think FactSet is seeing some of that. And I agree. I think some of the higher end social media stuff like LinkedIn, it would be interesting to look at. Somebody out there has done a study of how that type of company has affected the sales forces and companies like Robert Half. They're an excellent company, by the way. I mean, I know people who work there. So
they actually got good reviews in terms of a great work environment. I noticed that Craig Bramer's in the audience, and he was talking about it. Craig, I've unmuted you on our end. If you want, you were talking about there are some prospects that make you seem somewhat encouraged with Robert Half. So if you want to unmute yourself and join us, there you go.
Thanks, Kevin. Well, if you go back and look at history, this stock has bottomed at some point around the time when unemployment numbers start going up. It's totally counterintuitive, makes no real sense, but every time the unemployment number starts popping up, this stock bases and usually then starts rallying. Last time, I think it went up about threefold in about 6-9 months. So it's kind of it's what I would argue just like a rocket shot that it could do well. I don't know when the bottom is. I don't know when unemployment numbers start going up significantly. But when it does, that's when I've been interested in this particular name. Past that, I do worry about AI eating its core business, and I do worry about that you don't maybe need them as much as you might have needed them 20 years ago. So, but it's an interesting company without lots of debt. So,
thanks, Craig.
Yep,
Kent, any other questions that we have in the audience?
Nope, just lots of compliments for the speakers. And so I encourage all of you to go out and take a look.
All right, let's finish up with our final slides here, Cheryl. So if you want to be on our mailing list, you don't have to be in the DC chapter, but you can go here and do it. We don't inundate you with a lot of it. We'll just sort of point out our different educational programs. So you don't even have to be a member of Better Investing, but please share that with other people. You'll see the URL up at the top here in where the blue background is. on the border, and you can take a look at it there. Let's go one more slide. And this is for you, Kent.
All righty. Well, as you all have gathered from the many presentations you attended of the Digging into the BI, we all are volunteers. Both the Maryland and the DC regional chapters are run by volunteers with volunteer directors. And as volunteers, we encourage other people to volunteer because we have learned a lot and we have enjoyed working with each other. As a volunteer, you get to learn new skills and you get to help others learn more about investing. In addition, you can get some benefits, financial benefits out of that with discounted rates to the BI National Convention or Bank in Chicago this coming year, as well as receiving some good subscriptions from the online data feed and the tools on the BI website. So if you want to learn more and want to help, we would love to have you join us.
Okay, thank you.
Next slide.
We have a word from Armida Watson saying, please, if you are in the DC regional area or even in the Maryland area, please consider joining your chapters because we need people to be able to run programs like this. And so please consider putting in some time. It will be returned to you double fold.
Hear, hear.
Next slide.
Okay, and this is what we have for December. Vertivive, am I saying that right? Holdings? Never heard of it. That's our stock to study. And then this young upcomer, CVS Health Corp. We're still looking for 2 more presenters, so we have a good audience here. Hopefully I can get 2 of you to join in and help us out with that.
I think isn't Vertiv in the AI business? They do cooling systems.
Okay.
Very much so, Kevin. It's one of the hottest AI stocks that exists right now.
Mm-hmm.
There we go. Okay. See, hang out with these people, you get a little bit smarter. So anyway, come and join us on Monday, December 1st for our next edition of Digging into the BI. We have, I think, 1 or 2 more slides left. We do put this up on the dashboards. I've got to update a few of them to see how they're all doing. But again, these are public dashboards. You don't have to have a subscription to Manifest. And you can sort of see what they've been like after they've been either chosen by the audience or whether they were presented by someone here. And actually, it was kind of interesting that the undervalued features for the first 2 years was outperforming either the stock to study or even the ones that other people liked that they brought. So it was an interesting turn of events.
We've seen that in the past, too.
Yeah.
By the way, Kevin, I just got my reminder from Turbo Vote to go and vote tomorrow. So maybe you want to tell everybody to get out and vote.
If they have local elections, we have like 3 municipalities in the entire state of Maryland that are voting tomorrow.
There you go.
Their entire
governor
audience is like maybe 150,000 people. I think Virginia has something going on, right, Cheryl?
Yes, we are voting for our governor, our assistant governor, and our attorney general. And those are all very important situations because they control the future elections. So please, please, please go out and vote.
And just once, right, Mark? Just once.
Well, I didn't go there. And don't forget Portillo's tomorrow, too.
All right, very good. Anyway, let's keep going. I think we got one final one, and this is where the dashboards, those are the links to them. Again, you don't have to be a member. You don't have to have a subscription to Manifest, but please consider it. And then let's go one more slide, and this is the link to the YouTube channel as well. But anyway, thank you, Mark. Thank you, Ken. Thank you, Cheryl. Yes. And thank you, audience, for being here. Kent, thank you for all your help over the 5 years. I also saw Ken Williams was in the audience. It was the 4 of us that got this thing started 5 years ago. And thanks to all of you that are out here that have done presentations. This is what makes a stronger community. This is what makes a stronger chapter, or chapters in our case. So thank you all. Have a good night.
Thank you.
Thank you. We're going to keep this open a little bit just to make sure people can get those last slide decks or the SSGs. We'll sort of hold it out for a couple minutes, but otherwise they will be gone.
Yeah, and you can't get the handouts once they go to YouTube. You can no longer download them, so please take time right now to download them for yourself.
This was a very good turnout. We got over 100 people, which is one of our highest ever.
Yes. And it was
Again.
just like I said, the people there, you got the initial people that come in, and then you got the stragglers that, you know, want to come in once we really start doing something.
Exactly.
Great. Well, take care, Kevin. I will see you next month.
Okay.
Yep. And I got to get going because I'm working the polls tomorrow.
Yeah, do that.
Ooh, early morning, early morning. Good luck,
Yeah.
Cheryl.
4 o'clock, I got to wake up.
Sleep
Great
fast.
presentations, y'all. Thank you.
Thank you, Richard. Thank you very much.
Good night, everybody.
Good night.
And again, thanks, Ken and Mark. Thank you very much.